What's going on out there, good people? It is your boy Look Around with LMD Trading. Hope everybody out there is doing well. Hopefully you had a good week. If you were in the market, hopefully it was a green week. If not, and it was red, hopefully you'll be doing your reviews like we're going to do ours here today. And you can learn from those red trades and we can turn them into green trades. I know for myself, yesterday I did have a couple of red trades. Had a few green trades, which ended up making us finish green on the day. But we'll review all trades. We can learn from every single one of them. So let's go ahead. We'll get TraderView pulled up, which is what I use to kind of track my trades, track my statistics. In no way am I advertising for TraderView, but I will say that I do use them. So we'll go ahead and look at those trades in TraderView, and then we'll pull up Thinkorswim and kind of review them in there. So let's go ahead and get it started. Let's go ahead. We'll get the dashboard pulled up. Looking at it for yesterday, we do see that we took 7 trades. Had a total volume of 26. That 26 is in and out, so buys as well as sells. And we had a closed P&L on the day for $96. And these here were the actual trades that we took. So first trade that we got in was at 9:36. Last trade that we took was at 10:25. So we were in the market about an hour and pretty much hit our goal. Our goal every day is to make $96, and that's risking $25 per trade. So we're risking 25 with the goal of making 2 to 1 on our money. So if we look at our trades, we only hit that goal on one of our trades today. Couple of them we had pretty much 1 to 1. This one we stopped out for a full loss. This one here we took a partial loss. But we'll go ahead and get Thinkorswim pulled up, and we'll review each trade individually so that we can learn from them. So let's go ahead and get Thinkorswim pulled up. All right, and we are back. This here is the setup that I use in Thinkorswim to review my trades. It has the 2-minute, the 5-minute, and the 15, which is what I'm usually using when the market is open. As I stated in a previous video, when the market first opens, a lot of times I will have the 15-minute chart turned on to the 1 minute, but I usually won't get in trades based off of the 1 minute. But when I'm reviewing my trades, I do like to use the 1 minute because each candle represents 1 minute, and it's easier for me to find that area on the 2-minute and the 5-minute where I got into a trade. So we'll go ahead and get started with the first trade that we took yesterday, which was BABA, B-A-B-A. This was a call option play. I'll go ahead and click that. It was a call option play that we got in at 9:36 in 50 seconds. Give me 1 sec. I just want to change these here to 1-day chart so it makes it easier when I go to the front. Go ahead and do the same on the 1 minute. So it just puts us at the beginning of that day. So, all right, first one that we got into was at 9:36, which was right here on this candle where we have the green arrow, and then we got out of that trade at 9:46, which would have been this candle right here. So let's go ahead and look at it on the 2 minute. which is the chart that we would have been using to get in this trade. So just looking at it, it looked like we had a like a pennant or a wedge pattern forming here. On those patterns, I want to get in on the next candle that breaks the previous high. So we would have been getting in right there. We were right into a little bit of resistance with those two topping tails right there. And as we can see, at first candle, it did break above it, and it came back right there to that area of resistance that we had marked on the chart. And then it went on and went up, hitting our target. But we do see that it did go up quite a bit more, but because we had our bracket set, it pretty much got us out to trade right there at $56, which was our target. So that was the first trade that we took, it being a green trade. So we started the day off pretty good. Let's see what the next trade was that we took. The next trade would have been BIDU, BIDU. This again was another call option play. We got into this trade at 946, or I'm sorry, we got in it at 937 is when we actually entered the trade, which would have been on this candle right here, 936, and we got out of the trade at 946, which would have been this candle right here. I'm going to drop an arrow there, and I'm going to remove that arrow, and then we'll come over here and take a look at it. So on this one here, I don't necessarily see a pattern. Getting into this, I actually should have, if I was going to be getting in it off of a pattern, it would have been here off of this bottom and tail. But we would have had a little bit of resistance right here. But we ended up getting in up here. Again, just like how Baba was, we had some resistance right above us, and we see that this one did go up, got above that resistance and started pulling back. And this one, we ended up getting out of the trade when we did see that it was not going to go up and hit target. So on this one, we got out. We see here that we got out for a 1R gain, basically what our risk level was. So we risked 25, we got out at 25, so we got out at 1-to-1 on our risk to reward. Instead of watching that trade, turn and go against us and stop us out. So once we were in the trade, we kind of saw that it was not going to work and pretty much got out for our 1-to-1. So we'll go ahead and take a look at the next trade. These next ones were kind of what were you thinking trades. So the next one was BIDU again. This one here was another call play. Got in this one at 950. So 950 would have been this green candle here. So if we look, let me do that again. If we look on the 2-minute, we would have been getting in right here. And then we got out of that trade at 958. And let's see where 958 is. It's right there. So if you look, You can barely see that arrow tucked right up in there. So let's look at this one and kind of break it down. First thing that I can see is that this here was extended. So we would have wanted to see this pull back to about, so if you take this as one full piece, would have wanted to see it pull back to about half. So we would have wanted to see that pulling back. I'm gonna drop a line right there. We would have wanted to see that on a smooth pullback come to right there. But again, we're headed into resistance. So even with that pullback, we still would have been dealing with that resistance. So looking for reasons not to take a trade here. We had topping tails the previous two candles, and we were right at resistance. One good thing that I would look at and say is that this had a bottoming tail, but the buyers didn't really push this back up. So it did have buyers in this candle, but we were still coming into area of resistance. We still coming into this area of resistance right here. And as we saw, it went up and kind of pushed back, and we got out right when it was going to be breaking this area of now being support. But it really was not an area that we should have been getting into the trade at. So let's take a look at this one in Trader View. And like I said, we got in it at 950. We got out at 958. This one, again, we did move our stop up so as to not take a full stop. And we took a loss of $15 on that trade. So we'll go ahead, pull the dashboard up. And the next trade was BABA again. Let's go ahead and pull BABA up on Thinkorswim. This particular trade we got in at 950. So we would have been getting in that one on this candle here, which is right here on the 2 minute. And we got out of that trade right here on this candle. So again, let's go ahead and kind of analyze this one. So this was our initial trade. We actually made our target on that one 2-to-1. We had a nice green candle here. Red candle came back and engulfed it. And then we had another green candle come and engulf that red one, which a lot of people will call that pattern a bear sandwich. So you have this red candle, which is bearish, and it's trapped between these two green bullish candles, basically calling that a bear sandwich because you got the bear in the middle. Idea being that the buyers were strong, so they're going to push this back up. But if we look here, again, usually on a move like that, you want it to come back about halfway before it continues on. So this one here was, again, kind of extended. It made a small move, and then it just kind of failed and rolled over. Also with this trade here, when I get into a trade, I'm usually entering in the trade buying on the ask. So I'm basically buying at what a seller is trying to sell at, as opposed to buying on the bid where you're buying where the buyer wants to buy at. Usually on these type of somewhat momentum trades, if you're buying on the bid, you're usually not going to get filled. So usually what I'll do is I'll either buy it on the ask, or I'll buy it on the spread in between the bid and the ask. This particular trade, I bought it on the bid and kind of got in high. So you kind of see that I got out of this trade before it actually came back down below where I got in and stopped where I would have stopped out at. But because I got in kind of high on that buying on the ask, we did take a full stop on that one. So we'll pull that up. And again, like I say, $25 loss. And we got in 950. We got out at 1001. So that was Baba. But again, as long as you're taking your stops, it's okay to take a bad trade and stop out. So you just keep on moving. So the next one that we did take was CHWY, CHWY. And we'll get CHWY pulled up over here in Thinkorswim. This one here, we got in this trade at 1006. So let's see. Yep, 1006. So we would have been getting in this trade right here. And I'm sorry, this is a put play. I don't think I mentioned that a little bit ago. So we got in this on a put, meaning that we're playing the stock to go down. This one here, looking at it, we really should have been waiting on a pullback. So should have been waiting on a pullback. And again, you normally look at the move and you want to get in on half, because that's usually where your pullback is, where you want your pullback to be. So if we look at this one, it made this move down. It did pull back. We should have been getting in right when it broke the low of the pullback. So we should have been getting in here. This was an excellent pullback. You see how it came down, it pulled back. You get in right there. You could set your first target right here if you want to, if it doesn't show signs that it's going to keep continuing. But as you can see on this one, it came down and kept going. So that would have been a good trade. This one here, we did make, we made 1R. I'll go ahead and pull that up and then I'll bring it right back over. So if you look, we did make just about 1R, so just about 1-to-1 on our money. And I'll bring back up Thinkorswim. And the reason that we did get out right here is because on option plays, I don't really like to sit in them through the pullback. A lot of times I'll prefer just to get out of it, capture my profit, wait for the pullback, and then get back in again. So on this one, you wait for the pullback, even though it was a pretty deep pullback. Actually, about right, maybe about right there. So this one pulled back a little further than it wanted to, but we had a top and tail, so that would have been an excellent area to get in at right there, and then you ride it back down again. But like I said, this one here we did make made 1-to-1 on our money, made 1R. So the next trade that we took was TXN. So we'll get TXN pulled up. Again, this was another one that we were playing puts on. So we was playing this stock to go down. We got in this one at 1016. So we would have been getting in right here. And we bought 3 calls on this one. First one we got out at 1021 and then the next one at 1031. So let's kind of review this one. So here we see that it opened, kind of went up, pulled back. It got below this area of resistance that we had marked on the chart, kind of just tubed along it. Finally did break it. Somewhat kind of came up and tried to retest it and then pushed lower. So we ended up getting in as it broke this area of support, kind of breaking down. Made a good move as it tested this area here of what would have been resistance, because we're going down. If we were going up, this would be support, but because we're going down, this is going to act as resistance. We ended up getting out right here, which didn't really, this is not really showing me any kind of reason to get out, but it kind of tooled along, tested it again, and then we sold our last few contracts right here. But then you see, once it broke that area of resistance, we left a lot of money on the table. Left a lot of money on the table. So you hear a lot of times people say that all green trades aren't good green trades. This one here would kind of speak to that. We kind of got out of that early, and we probably left 3R on the table easy, 2 to 3R on the table. So this probably was a trade that we could have made easily $100 on, just looking at the move that made, as opposed to us getting out and just making 1R. So we made 1 times our risk on this trade. So it was green. Happy with the green trade, but we definitely left a lot of money on the table. And then our last trade of the morning was CHWY again, CHWY. And this one we took at 1025. Let's see. 1025 would have been actually this candle here. So I'm gonna drop another arrow here. Just, it's already 1 there. So we would have been getting in on this trade here. Again, this is extended, and this is the good thing about reviewing trades. You see everything after the fact. You see everything after the fact, and I'm sure this is what builds and turns into a good trader, because when you can see it after the fact, the more I see it after the fact, the more hopefully I'll start seeing it in the trades, and I'll start seeing what to look for. So this was a little extended. Actually would have wanted this to kind of pull back. Again, you're usually trying to get a pullback to half of the move. We got in pretty much at the bottom of the move, and then it pulled back. So as the previous trade here, I was saying, the play would have been to wait on the pullback after selling this one. So we sold here, which was smart. Got out before the pullback, captured our profit. Now we should have waited on the pullback and then got in on the next move down. So we got in during the pullback, and we'll look at the numbers. And this one here, during the trade, I kind of saw the error in my ways and pretty much got out flat. And as you can see, we got out with a $3 P&L on that one. So kind of saw the error in the ways, and decided to cut the losses and keep it moving. So those were the trades that we took yesterday, which would have been Friday. But I did want to review a couple of trades that were taken on the 5th, which would have been Wednesday. Particularly a trade that was taken on SE. And I'll go ahead and pull both of those up on SE and show the numbers for them. So where was the first one? So this here was the first one. Took one trade with a $237 loss. 10 times our risk level. Let's say that again. 10 times our risk level. That hurt. And I will tell you how that happened. I got into that trade, didn't get my bracket set, turned back, and by the time I noticed it, it had already taken off and put us in the hole. So got in the trade, forgot to set the brackets, and by the time I noticed it, it had already went against us. So I'll get the chart pulled up. We can kind of review and see what we saw. So we got SE pulled up. This was a put play. So again, on puts, we are buying for the stock to go down. So we got in this one at 935, which would have been inside of this candle right here. And this is one of those that I mentioned, trying to anticipate and get in early. Anticipation will always cost you money. I haven't been trading long. I have not been trading long, but in that short time that I have been trading, I have learned that anticipating the trading costs you money. So basically, I got in this trade early. Should have been getting in it after it had broken this area of resistance. So if it would have broke this area of resistance, and it should have been on this candle, because we had a move here. If you kind of call those two candles like just one candle, it's almost like a 3-bar play. So you got this one big red candle. You would have had this candle resting with a top and tail, and now you're waiting on this next candle to break this level. I got in here, didn't set my brackets, so I didn't set my what they call an OCO bracket. One cancels the other, meaning if the stock goes against me, it's going to trigger my stop loss. And if the stock goes in the direction I want it to go in, it's going to trigger my sell order and cancel the stop order. So if it stops me out, it cancels my sell order. If it hits my sell order, it cancels the stop order. Well, I didn't have that OCO bracket set. Stock went totally opposite direction of how I wanted it to go. And actually, it filled the gap, because the day before this is where the stock was at. It had gapped all the way down here yesterday morning. And as you can see, in less than 30 minutes, it had filled that gap. So by the time we saw where we were doomed, ended up getting out of this trade right here for a hefty loss, pretty hefty loss. But the thing is, you don't ever want to, so this stock was on my list as a put play. So I could have, after taking this loss, just scrapped it, taken it off of my list and moved on. But as you'll see here in a second, that is not what I did. I ended up still stayed watching it, and I'm getting it pulled. I'll get it pulled up here on Trader View, and as you can see, we ended up getting right back in SE a little later on. Let's see. So we got out of SC at 954 on that previous trade for that $230 something loss, and we ended up getting right back in it at 1029. So out of it at around 954. Watched some other trades that we were working on, and got back in it at at 1029. So we'll get Trader View pulled back up and take a look at it real quick, and then we'll be done for this session. So we got back in it at 1029. So let's see where that would have been at. So that's 1028. So we would have been getting back in that one in this candle right about here somewhere. So again, this is where we got out of it at. Kind of see a area of congestion here. Kept getting these kind of top and tails. Finally got this top and tail here. This one here. Look at the volume on that candle right there. Small candle, but probably that was the highest volume candle of the day right there. So that pushed a lot of buyers out right there. They did kind of try to come back, but look at the volume on those green candles. Big moves, big move, but no volume in that candle. Let's see. So that candle there had 86,000 shares in it. And let's look at this little candle. That candle there has 616,000 shares. So even though these candles are big, they have no volume in them. So this stock was done. It was heading back down. And as you see, it kind of mushed up along there and made that move down. It tested the VWAP. It came back. Again, no real appreciable volume down there. We had this topping tail, and we were getting in right as that broke that topping tail. A little premature again. Definitely consider that was a little premature again. So we bought one contract here as it broke it. And then once it came down below VWAP, picked up another contract here. It came back, kind of tested the VWAP, went back up to this area of which is now support, because basically think of it as it's flipped over from if you was going long on the stock. So this is support. Kind of broke support with that top and tail. So that tail there would tell me that there is a lot of selling pressure in that. Ended up buying one more contract here, and then just rode it down. Came down below the VWAP. Had a pullback. Probably could have bought another one here, because you would have had pretty much coming right to that area right there, which is what it did. Pull back, set a new lower low. Came up here, almost set a even high, but it didn't bust that high, and then it came down. And then we ended up selling all three contracts right here. And the reason that I got out of those contracts here is just because it was coming to this area here of resistance. So I didn't want to ride it all the way down. We had already made a nice profit on those three contracts. We made $475. So we had already made a nice profit far above our 2-to-1. We were just able to manage and watch this trade. So every time that it reached our sell area, we would just kind of move our sell target up, and then we'd also move our stop up, so that if it came back against us, we'd stop out for a profit. And so we just continue to adjust that upper stop and adjust our actual stop limit, and then we ended up getting out of the trade for 475 on those 3 contracts, and that's what ended up helping to make us green on that day. But yeah, like I said, this is pretty much what I do every evening after the trading session is closed. I'll import my trades over to TraderView. With stock trades, you can kind of review them straight in TraderView, but with options, I'll go ahead and pull it up real quick. With options, when you look at the charts, blow this one up real quick. When you look at the charts, you see right here these arrows where you're getting in and out of the trades at. So the greens are where you're getting in, the reds are where you're getting out. On options, they have like that triangle, and it's not telling you where in the candle you got in the trade. It's just telling you that you got in the trade in that candle. So it's kind of hard to review it on these charts. So it's easier for me to go back over to Thinkorswim, and like I said, that's why I use the I'll use the 1 minute to kind of get precise on the candle that I got in the trade, and then I just look at it on the 2 minute, knowing that the 2 minute is where I usually would have gotten in, either on the 2 minute or the 5. But let me see something here real quick. Just kind of take a look on the 15 and see if we see anything different on why we would have been getting in those where we did. So this here is the 15. Go back and look and see. So the first one we would have been getting in at 1029. So we would have been getting in on this candle here. And you can look on the 5 minute. And that one we may have been getting in on the 5 minute based on this bottom and or this top and tail below this area here of support and right at the VWAP. So getting in for it to go down. And then we got in this one here once it got below the VWAP. And then we got in this one on this pullback, and it's breaking down. So that's what it more looks like that we were getting in based off of the 5 minute on this one, because it kind of pulled back to this area here of support. Because again, when you're playing it to go down, this is acting as support as opposed to resistance when you're playing it to go long. So got in when it came off of that support, and then as we could see, we just kind of rode it down until it got close to this area of resistance. And as you can see, the trade pretty much just hung out right there along that area. But if you made it this far in the video, I would definitely appreciate a thumbs up if you don't mind. If you're not already subscribed, go ahead and subscribe. I look to make these videos and post them. There's millions of traders out there, and there's probably a million different strategies that's being used. This is just a strategy that that I'm using at the moment. Again, like I said, this is a small account that I trade out of. So I have found that using a small account, options do seem to be a viable way to make money in it. It is a cash account, so with the cash account, you don't have to worry about the PDT rule. And when you trade options, you don't have to worry about the 2-day settlement rule in a cash account that you would have to worry about if you were trading stocks. So if I was taking these same trades buying stock, the money that I use on a particular day, I will have to wait 2 days before I can use that same money again, because it takes 2 days for it to settle. Whereas if you're doing option plays, that money settles overnight. So I trade today, the market closes, in the morning when I wake up, all of that money is back there for me to use again, which is nice. So like I said, my goal is to risk $25 to make 2 to 1. If I'm kind of managing that trade and it's going in my favor, as you can see on that last one, that $50 risk can work its way up. So, and if you think about it, like I said, I had 3 calls on that one play. I just was pretty much adding to the position. So theoretically, each of those calls made about $150. So what's that? 5 to 1 on my money for each one, which is not bad. So again, I appreciate y'all checking me out. Look around with LMD Trading, and I hope to see you again. Peace.